Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. We're going to take a look here at DAR, which is Mines of Dalarnia, and essentially just see what's going on here and help us understand best practice for these types of situations. In other words, it's pumping, obviously, likely based on a fundamental catalyst, and we want to kind of understand more so what's going to happen next with this coin based on the simple fact that it's, when a coin jumps up this high this fast, there's oftentimes a retracement. We want to kind of understand that concept. I like to drive that home because I get a lot of questions for this. So thanks again to my community members for requesting that I cover this. I greatly appreciate you. And if you want to become a community member, CryptoCache.tech is the website, link in the description below. I essentially provide you with a trading community, academy, and signal group where I share my trades for every single trade that I take. And then, of course, have a trading academy that teaches you how to become a better trader from start to finish. That being said, check that out in your own time, CryptoCache.tech. But here's the thing with Dalarnia. I've covered this before in the past, and it's definitely done very well. But then also, of course, ever since November, most gaming coins have taken a strong hit. So it's interesting and cool to see this price action here today. But obviously, there's a fundamental catalyst. Usually, TA doesn't just explode like this out of nowhere, because there's really no telling reason for it to have done this, minus that. So again, the reason is probably pretty safe to presume that there is something to do with their platform, their game, that caused this increase. That being said, we want to take a look at some of the important fundamental correction, the technical data, and use a good fundamental understanding of how this should work. In other words, most of the time we want to use Fibonacci retracement levels to anticipate the pullback and or potentially how much higher it could go. All right. So again, what we do is we basically just take the most recent low to the current high. And the reason why I'm comfortably doing this is because it's further away from its highest point here. And that allows for us to help understand that it may not come higher than that today. So far, again, too early to tell. But generally speaking here, when you draw up Fibonacci retracement levels, you take the most recent low to the most recent high. And you typically want to take the one-day candlestick close, but we're going to need to work with this based on the fact that it's so over-exaggerated. And I want to try to drive a point home here as well. That being said, take a look at the simple moving averages. Work with that first. Nice little bounce off the 50-day SMA. That's fantastic. There's no 200 just yet based on the lack of trading data, but we can see 70 on the RSI is working as a potential resistance. Obviously, it got rejected out there. And that makes sense. 70 on the RSI is commonly a resistance level. Now, if we can break above that, just say we get a close closer to its high here of 184, then there's a chance we could continue to maintain this upward trend. And what I mean by that is the relative strength index is telling us that, hey, the last 14 trading days, this is too much, this is too high, too fast, essentially, and it has to come back down. Okay, so it's kind of rejecting out there. We've also got an obvious MACD convergence here that's really irrelevant in the grand scheme of things. Taking a look at the 4-hour, though, here's where it's going to probably get interesting. We've got both moving averages averaging lower than the current price point. Obviously, we see that. That is fantastic and helpful, but it's not like a big deal, really. What is important to acknowledge is that we're over 70 on the RSI on the 4-hour. Being over 70 on the 4-hour on the RSI is typically disadvantageous based on the simple fact that a pullback is almost always going to occur. I don't know if we can look at history here. If you take a look here, anytime the RSI's come up over 70, you've seen a pullback to follow. Now, it's just kind of that natural law. What goes up must come down, that gravity, so to speak, of trading. Now, if these ones previously here, even though it took them longer to get there, sold off almost the exact same ways in which it started, what's to prevent this from coming back down to here? Again, just think about that. Is there a likelihood of the price coming back down and pulling back? I would say yes, much more so based on its history, as well as the fact that RSI over 70 on the 4-hour is commonly, very common, a place in which the price will come back down and retrace. All right, so again, just something to be aware of. There's no guarantees in crypto or trading, but just generally speaking, this is too sharp, too fast. We're above key level, resistances, which is great, but I think that RSI is going to pull it back. And we'll look at smaller time frames to see how healthy this is. This doesn't look super healthy. 8 hours, 60% in 8 hours? Is that what it was? Whoa, okay, 97% in 8 hours. That's quite a lot. That's literally 2x in a short amount of time. So I would highly recommend considering trimming your position depending on the overall entry and your long-term picture. If you're swing trading this guy and you're 2x right now, I don't know what you're waiting for. Either way, that being said, Let's go ahead and look at a couple of things here. We don't need to really bother with TD sequential here because it's we're 2 4-hour candles in. But here's where it's going to get interesting here. So on the 1 hour, we look at TD sequential. We can see we went from a 1, rocketed up to a 9, essentially 9 hours later, and now we're getting a reset. So this is healthy in a lot of ways. So surprisingly, we're seeing a nice little continuation to the side here so far. Now, I'd be willing to guess if we were to look in the history, the previous times it's done this, it's probably had a very similar type of situation. Okay. In other words, comes up, down, up, over. Okay, maybe not so much, but oftentimes what you can see is these trends where the price comes up and over, and there's these little flag patterns here. We are printing so far a flag pattern. In other words, we are starting to see this little consolidation closer to this point, kind of give us that pendant, so to speak. And those do oftentimes break to the upside. But you got to keep in mind, if it were to break to the upside right now, it'd be extremely overexhausted, and there'd be a stronger pullback because of it. So in all reality, the only way we can get this to survive at this current price point is the price to go sideways for another 24 to 48 hours, get that nice cooling off period without retracing heavily. Now, to touch on my original point of some best practice for these situations. Oftentimes, and this is just statistics, because 83% of statistics is made up on the spot, right? So generally speaking, I'm not making this up, but it's based on my experience. And my experience is that in most cases, when you see these sharp increases that are traditionally just a very strong pump, likely to be followed by a dump because we are overextended in a short amount of time, we can oftentimes see the price retrace down to Fibonacci retracement levels of 0.5 or occasionally we can see 0.382. And what I mean by that here is if we look at these Fibonacci retracement levels, this green line is essentially telling us that's 0.5. That's the halfway point. So it's very common to see prices consolidate at the halfway point when they have this large of an increase. So my speculation here is if we cannot maintain this price point for the next 24 hours and it starts to come down, you could expect either one of two things: the bounce off of 0.5, which is $1.37, or for the price to consolidate there and inevitably come back down again. A lot of these things are contingent on Bitcoin, in my personal opinion. If Bitcoin has a fit and doesn't do very well today, or just say the next couple of days we see a 3 or 4% decrease, which is almost expected at this point, I think mines of Dalarnia are going to continue to suffer or bleed out as it comes down. Okay, because you got to understand, the folks that brought this price point up this high, this volume that we haven't seen in quite some time, it's going to slowly bleed out if this volume dissipates. Okay, so pay attention to the volume. If you see the volume starting to decrease, which it already kind of has, I think the likelihood of the price coming down from here versus going up is greater. Not to say it won't continue higher. It could print a very nice looking pendant pattern here, which we do see quite frequently. But until it does, and until we get there, I'd pay close attention to the volume and make sure we understand what's going to happen next in that regard, and give it enough time to kind of calm down and relax. It jumped up way too fast, way too quick. 100% in 8 hours is a lot of movement, and we need to acknowledge the fact that most people, again, the ones that drove the price action up here, unless there's a very strong long-term commitment or reason for them to have done that, then the price will probably come down because they're going to continue to take their profits based on the fact that there's a lot of fear of missing out that occurred right here. You know what's crazy about these phenomena? Oftentimes when the price comes up, this first push, this is retail investors, and then this right here, the second push up, is people like you and I that are adding to our position because we're afraid that we're going to miss out on a next increase. And these things are few and far between right now too, so obviously we got to take the wins when we can get them, right? But don't be naive to the fact that the likelihood of a pullback is greater than an increase from here. Once again, fundamental, I don't know anything about what's going on the back end here. If you do, comment below, let us know, of course, we can all learn. But generally speaking, minus the fundamentals that we cannot see here, technical data is telling us that we're extremely overextended and a pullback would probably be very much so in the cards right now. Again, that's just what the data is telling us. That being said, I hope that this found benefit for you and you kind of maybe learned something here, because these are all things I like to try to teach in my trading academy and my community to help you again become more self-sufficient in this market, because cryptocurrency is a crazy Wild West type of situation. And I can tell you that it can be difficult. I mean, I've even had some troubles here recently. I'll admit it. It's totally fine. It's normal. That's the way it goes. But you got to get back on the horse, and you can't let that, drive you down and push you down. And I can tell you that it's very rewarding to be able to have, this type of lifestyle. It's literally it's easy in a lot of ways, as long as you have a good fundamentals. And those are things I like to teach. Anyways, enough about that. I hope you learned something once more. Thanks again for your time. Again, if you want to become a better trader, CryptoCache.tech is the site. Link in the description below. Have a great rest of your day. We'll see you in the next one.